Okay, so now let's take a moment to switch our attention to the longer term time frames. You got the daily charts, etc., and this is what we want to keep an eye on. Of course, the dollar index futures, what we were talking about in the in the weekly market wrap, was that we had this trend line that the market should respond to if we can get back down to it, and that's pretty much my target at this point. Looking for the dollar to continue to work its way down into this level, find support probably right around this 81.5 zone, at which point then I'll probably start to look for some dollar long, and then see if we can actually set up for a potential head and shoulders type of reversal pattern. So the market here it has a little time to develop. Okay, so you can see here the left shoulder, then the head, and then the potential right shoulder here. You got the neckline that's developing here, so we need to come back and reestablish support at this neckline, and that's why I'm really reluctant to try to short the euro, for instance, right now at the very least. I don't know, but you know, if we do come up here on the dollar, that means as the dollar is coming up, the euro is going to be coming down. I'm going to be looking for this trend line here. You're going to see this high and this high. Connect these two highs, extend it out, and that's going to give us a trend line. There should be resistance right there. That's going to be your shorting opportunity in the dollar, buying opportunity in the euro. Looking for a target, boom, right here. And then this is where I will take it off and then see if this market will bounce up here. Short-term pop, look for resistance right here, and then you know, push off of this back down to the downside. We'll see if we break this major trend line. Okay, this is a major trend line which needs to be broken in order for the long-term long-term trend to change. And until then, we have to assume that really, if the market, even if the market does break to the downside, it's really, you know, a sideways consolidation up here, and we need more downside. We need some down channels in order to establish the fact that we're in a long-term downtrend. So really, at this moment, I'm watching to see if we start to establish more of a consolidation, moving away from the long-term trend, and then starting to develop the sideways consolidation up here. We'll go take a quick look at the moving averages, and you can see that we are pushing down below the 50 moving average on the daily chart, and therefore I can also imagine that we're going to start to use it as resistance. You can see here that the dollar has been resistance yesterday, and so that is already giving me the kind of inclination that I need in terms of watching to see if the dollar starts to move lower. You can see this downward trend line here that's being established. We have this channel. Take a look at this potential wedge that may be developing. We're going to start to tighten up here, and I think that we'll start to come back and reset towards the 200-period moving average, or at the very least you got this 81.5, which is, again, this is the lows going back to June. Now the thing about it here is that I imagine that we probably put in the high for the year, but I don't want to go out on a limb and just be sitting there pounding my chest. So until we get the the 50 crossing back below the 200-period moving average, I'm not going to go and start touting that the long-term trend is moving back down. So in a sense, we have to establish the fact that we have stopped going up in the dollar, but the next transition here is that we're going to go sideways. Okay, so that's how I'm imagining this, that we're coming back here to establish support at 81.50, and we'll continue to work our way down into this level, and then when we get there, we'll probably put in some sort of a double bottom here, maybe even a reverse head and shoulders, and then pop back up again back to this 83.50 level, at which point you can look for shorting opportunities in the dollar, and then we'll see if this thing can drop down below the 50 EMA, the 200-period EMA. And in a sense, that's the game plan of the dollar. You can see how we are just developing this sideways consolidation, and in a sense, we got to be expecting the fact that up at this, this upper part here is going to be this resistance zone. This is going to be your sell zone for the dollar, and we got support zone down here. All right, and until then, right now, all this stuff is what I call no man's land. Okay, you can try to get positioned to the short side, knowing that, you know, what I would be doing is selling it when the market gets up into this upper half of this trading range. Don't because we're in a downward fashion here, do not, I repeat, do not buy these lows, because well, at least until we get some better confirmation of support down here. That's really how I'm going to be playing the dollar index. Okay, let's go take a look at the euro here, and we'll kind of get updated on the daily chart. You can see that we're basically moving back above this key level. You can see this level right here is supposed to be resistance, because it was support. It was support here. Here it was support, and therefore once it broke here, right here, it became resistance. Right? That's the natural characteristic of support and resistance. And then you can see that it became resistance here too. But right here we broke back above it. And so now what we want to establish is that the market comes back down and we throw back price to this level, and then it becomes support. Okay, so looking for a buying opportunity right around this level, 122.5, let's call it. I think it is, let's say 122.82. But again, what you have here is the fact that the market, you know, broke out of this. You got this reverse head and shoulder here. Let's call this, you know, left shoulder, head, right shoulder, and then you broke the neckline right here. All right, so I'm looking for this thing. If you measure from this high down to this low, that's something like 300 points, and then you measure from this point, you know, it takes us up to like 126. Now, what's important about that is that we have a confluence here. You can see that you have this trend line, which is really where I'm thinking that the market is going to run into some sellers. Otherwise, you know, we could blast through that and then actually hit this resistance, and then we start to fail. That's how I'm going to be playing this. Remember, looking at your dollar in terms of the guidance here, in you know, to determine whether or not it's a safe opportunity to go long or short the euro, and obviously looking at these key levels until we get, you know, until we break down below this 120. Let's call it 122.75 level, or 122.90, or whatever this low is here, going back to June 1st. Until we get down below that level, it looks like this market is going to continue higher. So I'd probably be looking on the long side for this trend line here. You can see this low and these two lows. Connect these lows, and that's the trend line that I'll be watching here in order to determine. I want to, you know, look at that for some buying opportunity. Looking for some, you know, some selling into this trend line, and then as soon as we get down to this trend line, then I'll be looking for a pop back to the upside, looking for a target 126. Okay, so that's how I'll be playing the euro. And we go take a look at the moving averages, and let's see here. Yeah, the moving averages right now, I got to keep an eye on this. We're at the 50-period moving average on the euro, but the problem here is that we're not rolling off of it like we did over here. Okay, so you can see here the kind of response. Now, the interesting thing here is that when you have rejection, the market has a tendency to move away from the 50-period moving average. If it continues to chop around this area like it's doing right now, you can see that the market is moving sideways, and this really sets me up to you know, kind of give me the idea that we're going to consolidate here, and then we're going to pop right through this and then work our way up to this 200-period moving average. Now, don't get all excited about, you know, a 500 pip trade just yet. Remember, the dollar index is below the 50-period moving average, which is telling me that the euro is probably going to move above it. That's part of the reason why I'm really not trying to trade the euro short, is because the dollar is moving below the 50-period moving average, which suggests that the euro is going to continue to push higher, at least moving through this level. So short term, I'm talking short term on a swing trade basis. You can see here a little bit more closely your left shoulder, your head, your right shoulder, and your neckline right here. We broke through it. Now this is going to be support at 123. Okay, so as long as we can stay above this, look for this market to be a buyer around 123 even, stop just underneath that. You know, because if we break through that, then chances are we can come back and retest this this right shoulder, or at the very least this trend line, which kind of shows me that it's going to try to tweak everybody out, chop everybody through, or scare them out of their longs by going through the neckline and then actually finding the buyers right at this trend line. So that's why I'm really cautious about buying the neckline. But you know, if we can get back to this trend line, I'll be all over that in the euro dollar. Well, let's go take a quick look at the we'll take a look at the pound here. Of course, you can see that over the past couple of well, that's the hourly chart, so I don't want that one. Okay, so let's go back and take a look at the pound here. And over the past couple of days, of course, the pound in this trading range, so really nothing there to do. But you know, we're off of these lows and we're going back towards the upper part of this channel. Okay, so that's why I'm really, let me go redo that. You can see here that we're off of the base and we're really just working our way this ascending triangle, which suggests that at some point in the future this market wants to break back to the upside. The bears are defending this level up here at 157.75. You have this big resistance zone, but you have but you have this let's say here that you have this resistance zone, and then you have the you know, this ascending triangle, which suggests that the market is going to actually go through this level. You have the bears defending this level here, but at some point I'm saying that this is actually going to run out of force. You know, the bears are just going to give up because the bulls are getting more aggressive. The way you can tell is because the bulls are paying higher prices to support this market. When, you know, that means that they're not holding back, the bulls. Okay, so the bulls bought it over here at 152.75, went up, and they were like, oh, I missed that, I'll buy it here at 53.75. They're paying up, and then all of a sudden it comes back down. They're saying, I'll buy it at 54.75, pulls up, I'll buy it at 55. So the bulls are paying up here, and they will buy higher prices, and that suggests that at some point the bears are going to run out of steam up here, and they're going to, you got higher support, or what I call rising rising lows. Okay, rising lows, right? Rising lows. Anyway, so at some point the bears are going to lose. Typically what you expect is for this market to get through this, but I'm waiting for it to break out. Once it breaks out, then I'll buy a throwback. Right, we're going to look for a throwback, and I'll buy that. Look for this market to continue the upside. And the way that I'll determine that I don't like what I'm seeing, or that I'm wrong, is that if the market breaks down, we get a throwback to this trend line, at which point I'll be a seller and I'll be looking for downside potential in the pound. Now, when we go and take a look at the dollar, or the moving averages here, and let's see if you know, the moving averages with the pound are really choppy here. So that's part of the reason why you can't really rely on these, is because the angle of the 50 period moving average is practically sideways here. You can see that it's really not doing much, and the same thing with the 200 period moving average. So those are really not reliable, and really what I want is the moving averages to be moving down, at least the 50 period moving average. So in a sense, the moving averages on the pound are probably not as useful as we would want them to be. And let's go back to your daily chart, and we'll go take a look at the Australian dollar here. And the Australian dollar looks really important because what it's done is today we actually found some sellers, not very aggressive, but you can see that they did put a stop to the buying at 106. Now the question is whether or not we can get some long selling bars to come in and start taking this market down. So I'll be looking to see if we can establish some sort of a swing high, and then most importantly, I'd love to see if we can break below 104.50. You can see this low. This is the most recent low right here that we need to break in order for more selling to come in, more program selling. And you can take a quick look at this trend line. It looks like we have essentially reached the trend line, and so what I'm going to be doing is paying attention to some sell signals at this point, but you know, pretty much on the swing basis. We'll see how the market takes, you know, see if the market will take the Australian dollar down. Now, another thing here is to watch out for this trend line. So I'm thinking about at least a short-term push down into this 103.50, 104 area that could set up for a good 100, 200 pips. We do have this channel which I've been watching. You're at the upper part of this channel, and so at some point either we're going to break out or this thing's going to run out of steam, and I think that we should at least reset for the buyers to re-engage the Australian dollar and to see if the test the buy side to see if they want to take this market above the 106 zone. So in a sense, right now, I think that we are overbought, but this thing can go higher. That is the nature of the markets. And so I'm going to go and take a quick look at the moving averages to see where the major moving averages are. You can see that the moving averages are way down here at 102 half, 103, and I think that that's really where the market is going to reset itself. We've really pushed very strongly through these levels, and now at some point I imagine that the market is going to reset, if you will, come back down, hit these levels. You're even getting a cross here, a golden cross here on the 50 and the 200, and then we'll see if this market will actually bounce off these levels. Take a look at the 50 and 200 and you can see that it's not, yeah, check it out. We just crossed the 200 period moving average with the 50. So that's telling me that the long term on the daily chart is trying to cross to the upside, but you can see here that it might have taken a while before we actually came back down to the level, and even then it did not really give us much of a help. I mean, we did bounce off of it, but you know, we failed. So this time the test is if we can come back down to it, hit the level, and then rock it back up to the 108, 109, 110, etc. And so you got to be keeping a really close eye that you know, we've basically ran into this support or this resistance, and I'm thinking that the sellers are going to try to take control of this market and be on alert, because if we do something like this right here, then that could set up for another move higher if we do not break down. Okay, so in a sense, what I'll be looking for is some sort of a consolidation up here, and that'll give us some opportunities to play this back and forth. I'll be looking for selling opportunities as close to the highs as possible, and then looking for a target down in the lower parts of this trading range. You know, you can see that the market is probably going to ping pong back and forth. And look at this trading range, 105 half, 106 down to 104. It's going to give you a nice 200 pip range that you can trade, and that's what I'll be looking for in the Australian dollar. Let's go take a quick look at the Japanese yen. And the Japanese yen is really interesting to me lately because I've been, you know, I've been trying to get active here on these lows at just under 78 even, right around 77.98 is my first entry, and then my second entry is right around 78.17 or something. But the main thing here is that you can see the sideways consolidation that has come down to this level of support, and it's almost like we're creating this you know, double bottom is what I'm expecting this market to kind of establish, at the very least, try to work its way back up towards these, you know, these Fibonacci's here, you know, 79.13, you know, up to 80.10. I think 80 is going to be a pretty significant magnet zone, whatever you want to call it, because you can see these highs here. You got this high, etc., and all this kind of stuff. So I'm thinking that this is where the actual sellers are, and I'm thinking that's going to be my target for the moment, 80.50, and so we'll see how the market works its way out. Pretty nice as long as we can continue to trade on these highs. It looks like, you know, you got the bulls and the bears battling out, where the bears are trying to, you know, maintain, they're trying to establish their strength here of the highs, and the bulls are buying it near these lows. Like I said, I bought one right here. I bought another somewhere around here or something. I don't know. But I'm trying to see if this thing can get up to the upside. And that's why I'm trying to keep my analysis objective, because, you know, then if I see something wrong, then I need to get out. So right now my stops are at break even. But most importantly, I would probably try to get back in as long as we can stay above this key zone here. If we break below this 77.75 level, which is this low going back to June, I think that I would definitely, change my mindset away from the long side. I would stop trying to buy the yen and then see if about looking short, because you're going to have this support level that's broken, and what I'm looking for is the market to get through that, and then I'll look for a kickback rally to sell right here, and then that'll be my kiss goodbye trade for this market, looking for this thing to go back and test the lows of the year. You can see here down at 76. So that's going to set up for a pretty decent move, and I'll keep an eye on that and keep you up to date. And we'll see. Go take a look at the moving averages for the Japanese yen, and the Japanese yen really suggests here that in a sense the 50 is below the 200 period moving average, which tells me that the bias should be to the downside. Look at that 50. Looks like it's angled to the downside. So I got to be very careful once we get up to this 50 period moving average right around 79 even. And I may even have to cut my positions once we get up there. So in a sense, if we cannot get above 79, then I wouldn't be surprised if this thing starts to roll over, and that's why I'm really cautious about the long side in the Japanese yen. It looks like if you can respect that, I would probably definitely be looking for this market to start breaking down. If we hold that 50 period moving average and we start to roll over, then I may have to switch my guns and then start to look for the short side in the Japanese yen. We're going to take a look here at the let's go take a look at the Swiss franc. Of course, the Swiss franc mimics the dollar, and that's why what you need to do is just pay attention to what the dollar is doing, and then you can look at support, or you can look at confirmation in the Swiss franc. And that's really how I'm playing this here, is that we can see that we broke through this significant trend line, and so I'm also looking for kickback rallies back up to this 98 level or so. We have the potential to be, we do have this head and shoulders right here, but I think that the dollar is probably going to make a more significant head and shoulders that we can rely on, and so that suggests to me that the Swiss franc is going to throw back a rally up to this 98 level or something like that. You can see this trend line that's in force, so I think that's going to be a decent confluence area, and we're going to find some sellers up there and looking for this thing to actually work its way back to the downside in the Swiss franc. At this point, it's probably sit and wait, but the longer that we move sideways here, the higher the probability is that we're just going to break below this this support level again. So I'm looking for the Swiss franc to establish either some sort of a throwback to the trend line that it broke, or some sort of a ledge here, thinking that it's going to actually consolidate and then move back to the downside. So let's go take a quick look at the the moving average in the Swiss franc here, and you can see, just like the dollar index, we're resting right at the 50 EMA. So this is kind of like telling me, similar to what I was talking about in the euro. What we need is, this is a big line in the sand at this point, and if we cannot stay above this level in the Swiss franc, then chances are we're not going to respect it in the euro. And so in the Swiss franc, what I'm looking for, in order to confirm that we're holding as some sort of a swing low here, you can see this double inside day. Look at this inside day. Once we break out of the high here, that'll be your sign. And then if we can break out of the high from Monday, or excuse me, Friday, then I think that'll be another sign. If we break down below 96.50, then it's probably off to the races, and you can see that your target is going to be somewhere around 93 and change. Also look for this this trend line. I'm thinking that we hold, come up to this trend line, get rejected, and then we just fall apart in the Swiss franc. So I'm watching this really closely, because we're at a transition point where if we go below the 50 period moving average, that's probably going to be the nail in the coffin for the dollar. And then at the same time, you're going to see the euro probably start to break up above the 50 period moving average on the daily chart, looking for a target of the 200 period moving average. We're going to take a look finally at the Canadian dollar here, and the Canadian, at the very least, continues to slide. You can see that today and over the past couple of weeks it's been sliding, pushing down below one even. I thought that we'd actually start to stabilize right around this level, but right now the market is not maintaining. What I need to see is some sort of a double bottom, or at least a higher low, before I start to look for this thing to work back to the upside. and then on top of that a break above the reactionary high here that we put in. Okay, so we still have a long way for me to start to look at the Canadian dollar back to the upside, but at some point it looks like this thing is just looking like it wants to target these lows going back to 98.50, which is not that far. And if we can get back down to 98.50, I will definitely be looking for some pretty decent buying opportunities down there, similar to what I've been looking at in the Japanese yen. Let's go take a quick look at the Fibonacci's here. If you look at the low of the year and then raise it all the way to the high, this 99.37 has really caught my attention, so that's really what I'm looking for in the Canadian dollar, to see if we find support down at the 78.6% retracement. I think that's going to be a true line in the sand for the Canadian. But if we cannot stay above that, then I'm definitely targeting the low 98s, at which point I'll give it another shot to see if this thing wants to hold up for the year, maybe at least retrace back up into the 100s, 101s, 102s, 103s, etc. So right now we just got to be on on our hands, waiting for the Canadian dollar to tell us what it wants to do. And when I go take a look at the moving averages real quick on the Canadian, you can see that we have definitely pushed down below the 200 period moving average, and on top of that we're using it as resistance right about this one spot 0073, and the market continues to slide, which is not really what you want to see for long-term bullishness in the Canadian. I mean, all attempts for the bulls to hold this market up have failed, and now the death cross looks like it's upon us. You have the 50 period moving average trying to work its way below the 200 period moving average, and if you get below that, if you do cross there, then you're going to start to see all kinds of sell triggers fire off on all of the black boxes and computerized trading systems, etc. And then, like I said, we're going to be targeting this market down at 98.50 and probably even 98. So in a sense right now, what I'm trying to pay attention to is to see if this dollar index is going to give us a little bit more insight here, trying to push down into the key moving averages, and whether or not it's going to hold. Otherwise, it looks like we may have the dollar is probably toast for the rest of the year, and we're going to start to see the euro, the pound, and the Australian dollar back up at highs before not too long. I'm thinking that that long-term support in the euro is going to hold. And sure enough, right now it's holding at 120, and I'm even thinking that we're going to be targeting 130 before we even know it. I'm not even going to go out and start pounding my chest. I'm just going to start trading it. But the Australian dollar, if that proves to be the case in the euro and that the dollar is toast, we're going to see the Australian dollar back up at 110 and making new highs before you know it. So that's all I got for this market wrap. You guys stay safe out there. Good luck in your trading. Best regards to all. We'll see you at the market wrap. The next market wrap. This is Wish Doctor signing off.